Welcome back, everyone in YouTube land. This is your tinfoil hat economist coming back to you at the speed of light with episode number 28. Gold is in a bubble. Sell your gold. So why do I make this gloomy prediction regarding everyone's favorite yellow metal? Well, let's take a look at historic gold prices adjusted to consumer prices and expressed in constant current dollars. Here we go. Well, you can see gold was at 873.42 back in 1975, fell down to 493.02, 76, hit its all-time record high adjusted for inflation, $2,246.79, January 1980, 394. You lost a bunch of money. Bottomed out in 2001, up and down, now 2039, 21. So if you bought gold, if you listened to the inflation mongers, gold mongers in 1980, and you bought gold, after 40 years of holding gold, your investment is worth less than it was then, and you have collected no interest or dividends along the way. And I think we're in a similar position today. Now, why do I say that? Why would I say such a terrible thing about gold? Well, let's take a look at this chart that the graphics department ginned up for us. And you can see that gold at 873 in 1975, the inflation was 12.2%. Then gold collapsed, went all the way down to 493, and inflation went down to 5%. And when gold hit its all-time high in 1980, inflation hit a monthly high of 14.6%. 1980, that was April actually. Then gold collapsed. It went all the way down to 384, and that was inflation fell all the way down to 3%. Now gold did go back up in 2011, 2078 as you see. So why did gold go back up in 2011? Well, that was right after the 2009 global financial crisis, and that's when the world's central banks printed a lot of money and bought a lot of bonds called quantitative easing, and the inflation mongers and the gold mongers insisted there would be higher rates of inflation in the future, and gold as an inflation hedge would be a wonderful investment. Well, we know what happened to inflation afterwards. It went even lower. It reached zero back in 2015, and lately it's running around 0.7% annual rate as of June. The inflation mongers and the gold mongers are back. They're claiming that central banks are printing a lot of money, and we're going to have inflation in the years ahead, and gold will be that last refuge of sanity when the dollar becomes worth less than bark on some tree you ripped off some bark you ripped off a tree in your backyard. But the problem is, we've been hearing this story for 40 years of higher rates of inflation, and they keep going down. They went down from a peak of 14.6% in 1980. They're under 1% now. They're even lower in Japan, which has printed lots of money, done lots of quantitative easing, and run huge federal budget deficits in Japan, and their rate of inflation is zero. So, looking ahead, what is a prediction on gold? Now, economists have an idea. There's no such thing as a bubble. That the market price of any investable asset, be it a 4-unit apartment complex, say in Pasadena, California, or a share in Apple or Tesla, or a government bond, the value of all these things are set by the wisdom of crowds. It's a market. Market sets it. Some people think it'll be higher in the future, that asset. Some people think that asset will be lower in the future. And the efficient market hypothesis has really held a lot of water over the years. Very few, perhaps even none, investment managers beat the market. That's the reality. Okay, gold is even trickier. Gold belongs to a category of investments that yield no income. Unlike an apartment building, a share of stock, which might pay a dividend, or a bond, gold yields no income. When you buy gold, you're making a bet that someone will pay more for that asset in the future. So gold belongs in a category along with coins, stamps, collectible, of course, precious metals, precious stones, antique maps, art, cultural artifacts like pre-Columbian art, and animal figurines, collectible cars, beautiful collectible cars, dinosaur, paleontological items, even meteorites. Some people collect meteorites and they cut them in half, beautiful insides, and they retail those, quite valuable. That's where gold is. I think because of this inflation mongering, which follows on the heels of central bank expansionism of the last year, because of this terrible pandemic we have globally, people are going back into gold, anticipating inflation in the future. But as we see from this chart, inflation at 0.7%, inflation was 14.6% 40 years ago. Inflation, not just in the US, but globally, has been going down, 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 down for decades. And in Japan, where they run large federal deficits, and they print lots of money to buy bonds, the central bank does. The Bank of Japan owns bonds more than more than 100% of their GDP. The government has issued bonds at 225% of GDP, and Japan, as we speak, faces deflation. So if you're lucky, you can sell gold now and get out before it gets cut in half again, or you can hold on to your gold, and you can hold on to it for another 40 years, and you might lose money and never gain any interest or dividends along the way. So sell your gold. This is your tinfoil hat economist. I'm looking forward to seeing all of you in episode number 29. But now I'm signing off at the speed of light, and I bid all of you a fond farewell.